Welcome to the inaugural series of The Impact Bite, the podcast which showcases the various perspectives of different investor categories in relation to the current investment landscape. My name is Will Lowry, and I co-lead the Institutional Investor Network at ClearlySo, Europe's leading impact investment bank. I will be your host for this week's daily series, in which I look to test investors' genuine appetite for impact investments, as well as challenging 5 highly relevant yet different investor profiles in order to gauge whether the investor lens really does vary across family office, impact funds, private equity, venture capital trusts, and corporate venture capital amidst the post-COVID-19 investment environment. Welcome to the second episode of this week's Impact Bite series. And I've been looking forward to today's interview from the very moment our guest confirmed his availability. It is an absolute pleasure to introduce our corporate venture capital panelist, Erik Karlsson, who heads up CoLab's investments in sustainable fashion. Erik joined CoLab in early 2017 after a number of years working for the sustainability department at global fashion retailer H&M, and an earlier career in environmental and energy consultancy. I first met Erik back in November 2019, and to this day, I remain in awe as to the extent of his knowledge of the sustainable fashion sector. Erik, it's great to have you on the show, but before we start, can I ask whether the claims are true? Are you, in fact, the most connected investor in the world of sustainable fashion?
I don't know. Yeah, maybe.
I think you are, Erik. I think you're being very modest, but it's early morning, so I'm going to let you off the hook.
Okay, thanks.
Erik, the purpose of this Impact Bite series is to explore whether certain investor types are behaving at all differently in the context of the current investment landscape. So, as one of the largest and most influential CVCs, could you begin by sharing your key takeaway or learning about the venture market during this period of lockdown?
Yeah, sure. And I think, for me, I'm very humble about this whole situation. This is my first real crisis as an investor. And I think the key learning for me would be how quickly things went from being, very optimistic, very much a bull market that seemed to, there was no end in sight. To something very pessimistic, a real worst case scenario in mid-March, end of March. And I think what we're seeing now, a few months into this crisis, is that I guess the likely scenario going forward lies somewhere in between those two extremes. So I would say that for me, that would be the key learning, just how quickly things can change.
And a bit of a follow-up question there, Erik. I've been speaking to a number of investors throughout the lockdown period, and the rhetoric is definitely that investors are remaining open for business as usual. Is that different in your case? As a CVC, are you by nature open for business as usual?
We're open for business. What we have done is, I guess, naturally we have had to focus more on our portfolio and just, crisis management. At least for some of those companies. For many of my companies, they're pre-revenue. They're a few years from trying to be profitable, so it hasn't hit them maybe as hard as others. But we're of course still open for business, and what we're seeing as well is that the inflow of new leads has gone down, and why that is, I'm not sure. Maybe companies are focusing more on getting investments from existing investors in these unsecured times.
And Erik, I guess one more follow-up point. Given the corporate venture capital fund can bring more than pure capital, it can bring the strategic partnership and also a long-term horizon view. Have you seen founders target you for that profile specifically above the traditional venture mainstream investor players?
Not more than usual, I think. Founders who are interested in strategic investors tend to find us, no matter what. So I haven't seen any change there.
Has the investor founder dynamic changed at all as a result of COVID-19? And has this impacted your investment process going forward at all?
I think, yes, it has impacted the relationship. And from my perspective, at least, I think that relationship has deepened to a more straightforward and honest one. There's, I feel, a better understanding on both sides of the sort of challenges that we've all been through. And I would say for us, H&M has been as hard hit as any of our portfolio companies of this crisis, given our large physical footprint. So I think that has led to, the founders understanding us better, and we've had to take the time to really understand the challenges that they face. So I think that has been actually a positive thing from this.
And Erik, given the potential uncertainty in the near-term future, have you had to adjust or reflect new terms and structures when investing in prospective businesses in order to reflect the challenges that they face?
Yes, I mean, in some cases we've had to revise terms given I guess not just on our account, but given the macro economic situation, and there has been a lack of funding in the market. So we've seen that in a number of cases, not in all cases, but in some cases we've had to adjust terms and plans for financing rounds.
And has that been a change in the investment vehicle? So have you seen an increased dependence on participating preferences? Maybe have convertibles become a more common feature of deals?
Yes, both. Yeah, as you say, in the structure of the deal. So we've gone in some cases from an equity round to a convertible round, and the amount that companies have been looking for has been decreased as well in some cases. So we've seen both that, and then in some cases where we've decreased the whole round, we've seen that it's oversubscribed. So the question is now, did we have to do that in the first place? But who knows? I think in these cases it's better to be cautious than to be over bullish.
Absolutely, yeah. That's definitely something that we're hearing from our own network. Investors seem to be placing much more importance on extending runway. We saw 9 months previously as being a bit of a benchmark, but it definitely seems like investors want to see at least 12 months going forward. So I think the overfunding has definitely been a feature that we've seen as a result of COVID-19.
Yeah, and then we've seen, just to follow up on that, we've seen 18 months as a requirement as well. So even longer. Even longer. Yeah. And I guess that tells you something about how long some investors think the crisis will last.
That's a very good point. Do you have a couple of resources, tools, or top tips that you might be able to recommend to fellow investors as a result of your own experience throughout the lockdown period?
Yeah, I would say, first thing that we've noticed is that a close relationship with your IC, to be able to have their trust in these situations, is really invaluable. And you need that in order to make decisions quickly when things outside your company and outside your portfolio is changing very quickly. That has been a real plus for us, at least. I think the second thing, and we already talked about this, it is that to secure your runway as quickly as you can, and for as long as you can. I mentioned 18 months is what we've heard as requirements from other investors. Even if that means throwing out the plans that you had out the window, I think that's been a huge value for some of our companies.
And interesting to pick up on your IC points, Erik. Could you expand on that a bit more? Because as a corporate venture capital firm, I would have expected maybe the IC to be maybe a step away from your desk, whereas maybe a smaller family office or a VCT sit in smaller hubs where they might have an investment director off which to bounce ideas throughout the day. So are you very connected to your IC on a daily basis? And is that an interaction that is more frequent than I would have assumed?
Yeah, I guess daily is a bit exaggerated. On our IC is our CEO and CFO. So of course, they have other things they need to focus on as well. But I would say we have a very close relationship, and we're in touch with them at least every week. And as I said in the beginning, I've done this, or maybe you said it, I've done this for only 3 years. But over those 3 years, we've been able to build up a very good relationship. So I think when there is trust between the IC and the investment team, that's when you can make decisions fairly quickly. And that has proven very valuable to us in this crisis.
Absolutely. I think that trust component is critical on both sides, so internally and then also with the founders, which you have clearly demonstrated is a key learning from your time during lockdown. If you could take the IC any deal tomorrow, your perfect deal, what would it be?
Well, in hindsight, I wish I'd invested in Zoom that we're recording this on, and that I think they grew like 200% or something in the past month. But if you're looking at the growing stay-at-home trend, one area that I'm very interested in is video shopping. Now we've seen that as a trend in Asia for the past 1 or 2 years, I think. Now that we, work-wise, we're staying at home, and for cultural phenomena like concerts, we're also staying at home and watching that from our living rooms. In the coming year or so, I'd be very interested in exploring such a deal because I think it's going to grow out from just be a phenomena in Asia. So that would be a perfect deal if we find a good team and a good valuation and all the other things, of course. And otherwise, I'm an impact investor first and foremost, so I'm going to stick to that. And I expect sustainability to be even more important for people and companies once this is over. And that's also, just looking at Sweden where I sit, that's also what our government is saying and what the business leaders, including our CEO, have been saying throughout the crisis. So that's not going to go away. A really good, relevant impact investment. I take that to our IC any day.
That's a really interesting point, and I'd like to dive into that a bit further if possible.
Sure.
If you came across a real knockout impact investment, but it potentially fell outside of your typical investment criteria, say in terms of stage or in terms of investment size, are you saying that you would still go to IC if the merit of the impact was still spot on with your strategy?
Yeah, I think I would. If we have a strategic connection, as we call it, meaning that the business side of H&M, or the H&M group, I should say, that they are interested in working together with this company, then we can be very flexible. And we've done other deals, not maybe in impact investment, but we've done other deals on such terms. So then we can be flexible with investment size or stage.
And that's another really positive feature of the CVC, is that if there is that strategic angle or that fit, you can, as you said, be flexible in your approach. So you could probably consider a lot more opportunities than maybe a traditional fund, which has to invest within a predetermined parameter, as it were.
Yeah, that's right. As long as we have that very strong strategic connection, we feel that this will be a good deal for us and for the company that we're investing in. So as I said, then we can be quite flexible.
And in terms of subsectors, I know that sustainable fashion is a large beast, as it were, but are there any areas in particular that you're looking at?
So in the past, we've looked at fiber and material technology, and we've done 5 investments in that area. We've only done 1 investment in processing within our supply chain. And what we know is that a large part of our impact is within processing. And by processing, I mean, for example, dyeing of textiles and fibers. So we have actually done 1 investment there in Colorifics, a UK-based company. But I'm interested in finding more companies in that sector. Colorifics is doing a great job, but we're so large that we need probably more solutions. So that's one area that I'm really interested in finding more companies. Also, I think, we've invested in our large materials, let's put it that way. For example, new cellulosic fibers and polyester recycling and so on. But we also use a lot of accessories materials like hard plastics and so on. And we need to be able to find alternatives for those kinds of materials as well. So that type of either a new type of renewable plastic material or a recycling technology for hard plastics is something I'd be very interested in.
Thanks, Erik. Following on from that and leading on to the next question, can I ask you to rank the following corporate characteristics or deal characteristics in order of importance? I think I know which one will be top following your previous answer, but the choices are management team, target market size, impact, near-term profitability, and high growth.
So I'm going to surprise you and pick management team as my top one.
Erik, I can't believe you've done that. I can't believe you've done that. You've let me down there, Erik.
Yeah, sorry. I mean, I will always choose a good team over anything else, and I think our, the investments that we have made have proven that by far. That is by far the most important thing. I put impact on a strong second place. As I am an impact investor, and I then, because you prepared me for this, but I then put target market size. I think we're a huge company, the H&M Group, so for us it's very important that that the target market size is big as well. Then I put high growth, somewhat longer down on my list. As we said before, as an impact investor, growth is important, but maybe more long term. And then at the end, I put actually near-term profitability. Not that it's not, I mean, it's of course a huge plus if we have that, but my kind of investments, they take a long time to reach profitability. So yeah, I ranked it that way.
Perfect, Erik. And I'm now going to take you on to my favorite round, the quickfire round, where I will mention 3 statements to which I'll ask you to give relatively immediate and hopefully totally genuine responses. So you ready for this?
Okay, yeah.
Perfect. Well, the first one, Erik, private market prospects for the second half of 2020.
My genuine thought about this is that I think what we're seeing now has been, maybe, we're talking about V shapes, U shapes, W shapes. I think this could be a W shape, or I'm afraid it will be.
The second quickfire statement, impact investing, a mandatory investment strategy or a personal preference?
I'm a liberal at heart, so I'm not for a lot of mandatory requirements. So I'd say it's, sorry, how did you phrase it? A personal choice.
A personal preference, yes.
Yes, yeah. That's what I would say.
And the last one, Erik, and the one that we are most excited about, the final statement, what has been your most surprising lockdown hobby?
Well, actually, so I think that's a very easy answer. I became a father in March.
Oh, congratulations.
So, thank you. So it has been, changing nappies and going for walks with the stroller and just playing with my daughter.
Oh, fantastic. And no doubt sustainable nappies being used at all times.
Yeah.
Great. Well, Erik, thank you so much for your time today.
You.
It's been a real pleasure. I think the key learnings have been fascinating from my side, and I think that our audience will be really interested to have learned the positive aspects that a corporate venture capital firm can bring. Not only deep pockets, long-term partnership, but I think a point that you raised, which really did open my eyes, was the fact that H&M has gone through similar challenges as many of the portfolio companies that you're looking to help and prospective companies that you're looking to invest in. So I think that you do really bring an extra element to that partnership perspective. And obviously, in terms of the investment side, there is much more flexibility in the investment strategy than people often think there is. So I'm sure that you'll have a large inflow of corporates reaching out to you following this podcast. and I hope that they do fit the bill. Hopefully we'll manage to find you a video shopping company in the near future. But thank you so much for your time, Erik. It's hugely appreciated.
Yeah, thank you very much. It was fun. I hope I was able to bring some perspectives, and looking forward to hear the full podcast.
Perfect. Thanks, Erik.
Thanks very much.
Please do join me for the third episode of the Impact Bites Lunchtime Investor Series at the same time tomorrow, so 12:30 on Wednesday the 17th of June, as I'm joined by YFM Double Act, who will share their views on the market from a VCT investor perspective. As ever, you can register for tomorrow's interview via the ClearlySo website, www.clearlyso.com/insight. Or do feel free to contact me over LinkedIn or directly over email on william.lowry@clearlyso.com. Either way, I hope you've enjoyed today's show, and we'll be back online at the same time tomorrow to share some more fascinating investor insights.